Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Wednesday, May 18th, and this is your end of day recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. This video is for education purposes only as well. So, that escalated quickly. In terms of volatility, finished up about 18% for the day, gets us back into this lower 30 range, right around 31. Theme of the day, really no place to hide. Couple catalysts for today's move. Definitely Target, top of the list. Walmart had this. I'm gonna talk about a couple things that you're gonna hear all over the place, but just it's definitely part of today's theme. But yes, Walmart coming out yesterday and having bad numbers, horrible price action, but you kind of just thought, or at least I thought anyway too, hey, that's Walmart. The confirming report was going to be Target. And I think that there was many that thought that Target was going to just kind of come out with a different type of results, but nope, they were more of the same. And once you have a second report like that, that is really nasty. It does confirm what the other management group was talking about, that there is weakness and there's major supply chain issues. So that brought things down, and SPY finished down, roughly down 4% for the day. Qs, I mean, these are big numbers. Down 5. Qs finished down 5% for the day, and giving back a lot of that rally that we've seen the last couple of days. So where does this leave us now? And then if I didn't say this, the theme of the day, no place to hide. Consumer staples had a huge move to the downside. These areas that we've talked about these before on a couple different occasions, that the consumer staples are not cheap companies, right? We know that this market has been more in love with cheaper companies, like PE ratio of around like a 10, but the consumer staples are expensive, right? Some of the tech companies have cheaper PE, lower PE ratios than some of the consumer staples. So I've been in a couple of these things here and there, and I've gotten out of them pretty quick just because I don't like being in these things that are just too expensive. Like I was in Hormel, HRL, I think last week. I just didn't feel comfortable staying in it. I've looked at the utilities as well a couple times. Con Ed was a name that I was looking at, and I just think that they've gone up. They're just too expensive, to really feel comfortable to put on a decent swing trade. So in any event, let's go over the price action. I will go over my trades as well. And how I thought, I did a good job, I thought, basically taking off risk yesterday. I had a lot of trades that worked pretty well for me, but even the ones that I kept on, you just can't escape this type of move when you go down like this 5%. I'm looking at the NASDAQ first. We do have this second VPOC that's kind of left lingering here. I didn't know if we were going to come back to that as quick. I didn't think that we were going to come back to it as quick as we're kind of getting down to where we were basically towards the end of last week. So we'll see how that goes. My thought process was that, hey, maybe we could see a move up to the 20-day moving average that kind of lined up on multiple time frames, but we could not really break out a value. So what I try to do a lot of times is kind of map out a plan, right? And I call this I do call the market webs a roadmap, and basically say, okay, if we move above this level, where could we get to next, right? And I talked about that specifically in yesterday's video, I think as well, pre-market. And we did, price kind of poked its head outside of the value area, and then got rejected, and then basically just waterfall down. We did not even make an attempt to really, other than this bar here, to kind of stop at the bottom of value, just slice through it like a hot knife through butter, basically. All right, now there is one thing that's, I mean, this is a small positive. I would not hang my hat on this, But we did take out what's known as this version point of control. That's all the way from back in here. Okay, so if we can cut, so I think you just, now it becomes, hey, can we possibly put in a higher low from last week? Right. So this was what I think a Thursday of last week. So that's going to be the next test. And this level right here is 11,866. That's the level to watch. And then if we go over to S&P, which I usually start these videos with first, I mean, that's a nasty looking bar. It's a big move. It is a big move. We actually tried to go a little higher in the after hours market. So you do have a nasty bearish engulfing candle, and we're back to that VPOC takeout, right? That now we don't have another one down here like we do in NASDAQ, but that was a really nasty move. Also, same thing, a little bit, we got a little bit closer. We talked about, I think in yesterday's video, that this 41.47 lined up pretty closely with the 20-day moving average, which is here. So again, maybe splitting hairs and getting a little bit too cute in here wasn't the smartest thing, because this was pretty close getting to the 20-day moving average. So we're back below the 5-period moving averages. So that's a rejection. The other thing that's kind of interesting about this now, I think today was more of Target and some of the earnings reactions versus Powell speaking yesterday, but it is kind of interesting that it was a little bit of a coincidence that the last time Powell spoke was here, and the day after we had another, we had a decent bearish engulfing. So I don't know, but I think that these, and yesterday was not a Fed meeting. It was just Powell giving a speech, and he answered questions about what he thought needed to happen, which was basically nothing new. We didn't get really any new information. He just basically said the same thing as he did last time. They're talking about 2 rate hikes, each 50 basis points. That's going to get us to what, the summertime, right? So there is a 5. I don't know if this got taken out. This did not. So I would be mindful of that tomorrow. That this lives down here at 38.99. All right, so that's a 5-minute VPOC. But again, very, crazy the way that this price action works. It's not something that we see. If you're kind of shocked by this price action, it is kind of alarming to see us just go straight down like this, right? There's very little buyers coming into this market. What I've said before, because we've had other days too, where it just doesn't seem like there's any fight at all to this market. And you'll notice, take a look at all these 5-minute bars, right? This started to happen around like 1:30, right? That someone is really pressing to the downside, right? Because look at how many times these bars, right? And this is the first like minute to 2 minutes of this bar would be green. It's also very, very tricky when you're watching this, because you start to see a green bar, and then by the time the 5-minute bar closes, it is gone red, or you see that somebody's basically pushing this down, right? So there are still sellers in this market, right? The other thing to kind of think about too is, we want to find out if things are priced into this market, right? I think I said probably in one of last week's video that you want to get bad news, and the reaction is actually like somewhat positive. Either a name doesn't go down, it's flat, to possibly even up on bad news. Clearly, we are not there yet, right? When you look at what happened to Target today, which, by the way, did, finished a little bit off the lows, but still down 25. I think, where did this thing get down to? 155. Right, so here's what this bar looks like. Notice that right through this VPOC, another one down here. Let's look at Walmart too. I thought that, wow, look at that. Down another 7% for Walmart. I thought it was interesting that this one was left out. You still have another one down here at 115. Just nasty, right? And coming down into here, kind of interesting. I've seen this in a few charts to be a little bit positive. um so again, sorry for being slightly positive here, but if you look at some of these weekly charts, like look at a chart like Starbucks, right? Notice that this version point of control was taken out back in March of 2020. It could be making a higher low from that standpoint. Now again, there's a lot of technical damage here. This has been a move straight down, but for long term, you know I'm kind of starting to watch this. I don't have a position or anything like that. I'm just watching. Also, JP Morgan was a chart that I was looking at the other day. Right? If you look at this weekly chart, it's kind of into this 200 period. It is into this 200 period moving average. Now it's got a hold here, but you look at this and you're kind of like, hey, it's not that bad. Now, of course, we don't know if the downside is in yet. I'm just watching, and there's no confirmation that it's not, that it isn't, because price is still below, these moving averages, and who knows? It's not out of the cards to see a move down to 114 or 93. So again, I'm just watching. I don't have a position in either one of these, but you begin to kind of, and I think also, as we're we're more than halfway through the month of May, right? There's some analysts that are thinking that this will get better towards the end of the year. If you can kind of just sit on your hands and be patient with this price action, and just kind of continue to kind of let it happen. I mean, I'm in this market, but I've been really kind of keeping my cash balance, above 80%. I think I got it down the other day. Cash balance was like down to like 82%, from where I was last week, which was above 90, and then I went right back in, and this is my, this was the trade blotter yesterday, where I took a lot of targets and things. I took off some energy plays, and specifically, I think I said in yesterday's video that I said, hey, I don't want to be greedy with energy here. We've had 3 or 4 days of a nice move in some of these stocks, and this is not the time to think that, rocket emoji, that you're going to blast off here, right? Here's where energy finished, so we have seen this happen to energy before, and I think you just got to be patient with it and see where it settles in, because it is making new highs, right? This is the XLE ETF. Notice that we got slapped right at this, energy got slapped right at this virgin point of control, right? This is all the way from back in here, right? And we'll see how this handles this. Right now, you don't have another one to all the way up here. I think that's the last one at 92.6. Notice what happened prior to this. We kind of hung around a little bit, and then we went down from 80. We went down to the 50-day moving average, kind of flirted with that back and forth a little bit, and resolved higher. All right. So first level, I would watch this 80.78, and maybe at this point, I'm kind of looking for maybe a move down to the 50-day moving average. So we'll see if we get that. One name I was kind of watching today, at some point today, was Conoco. We'll see if that holds 103. All right, so that would be a name that I might be interested in getting involved in, but not yet. All right, I was just going to talk about a couple other things. The breadth, right, at the bottom of the screen, right? We're using down volume and up volume for this. Right, I talked about this back on 5.9, right? So let's blow this up a little bit, right? So 5.9 was where this got the most extreme. We had one day at 5.5, which was the worst breadth of this year, right? And then we had 5.9 where it got worse. Today wasn't as bad. So let's keep an eye. And again, this is the breadth for the overall market, not for this stock. But notice what happened in here, right? And I went over this back when this occurred. You can reference one of the videos, but notice that breadth got really bad too on 3.9. Notice that the damage still, things kind of, whoops, let's bring in, let's get the S&P in here. All right, so the damage, zoom out one more time. All right, right? So you could see that as things were getting a little bit better, right? And we were coming in to make, and the market still went lower after this really, I mean, this breath got to be a -40, right? So we traveled lower, but every time we did, right, the breath wasn't getting as dramatic, right? So it's a little bit different because we haven't taken out the lows yet. And we're still kind of cycling through here, but I would keep an eye on if this breath continues to um, not get worse than what it was on 5.9. Now, if it gets worse than what we saw on 5.9, it kind of negates the whole situation, right? But if if it doesn't stay as dramatic, maybe we are kind of carving out some type of a low here. Right. But again, that remains to be seen. These are just things. This is just analysis to kind of walk through this. Am I sticking out my neck here based on any of this? No. As I mentioned, I continue to kind of, I took a shot on some things towards the end of last week. I took profits on, and I added to them in the beginning of this week, and then I took a lot of profits. But here's the trade blotter today. Some of the trades that I had left over, I actually made money in a day trade today. I was looking at GFS, that didn't work, took that one off. I also got stopped out of a day trade in Lucid. So net, not that great day trading. But I got stopped out of an IBM trade that I just put on yesterday. I try to hang on to this till basically to not get stopped out, because if it can, so here's the tricky thing. Right. Well, there's a lot of tricky things right now in this market, but I said, hey, if IBM comes back in to test the top of value, which is around 135, I would add to the trade. Right. Well, the problem is it just blew past the support. Right. So now it's a different looking picture. Right. And if that's the case, then then it becomes a stop rather than I'm going to add to it into support. All right, what else did I, and I got stopped out, and I actually added to CF because I took a couple targets in it yesterday. Maybe it was a little bit too cute in that. Right. And we'll see. I'll keep this one on my radar, but I just didn't like, there's too many things that were just falling and falling and falling and falling. And the way that this market is, sometimes you think, oh, I'll let it go past my stop price a little bit, and then it just goes another $5-10, like no problem. So I would rather just be conservative, take it off where I said I was going to take it off where the stop price is, and go back and reassess. It's painful right now. It's not an easy market to deal with. It's kind of frustrating when that happens, but I'll tell you, you just kind of get over it. I feel, I manage a trading room, so I kind of feel bad when I just put on a trade and, like, oh, geez, he's getting stopped out of it the very next day. But, that's part of just, living to fight another day in this market. And, we've talked about this over and over, that you just cannot sit with trades and think that they're going to work out. This market is just moving too fast. Right. So a couple other things too to look at. I mentioned that the VIX got back into this range. So, did not make a new high here. But like we have been saying for now, like the last 2 months, one day is not a trend. And we did not break out above there. So that's guys. Again, patience is key here. And with this type of movement, if in terms of what the market is doing right now and the speed that it's moving, if you are surviving with the paper cuts, give yourself a little pat on the back, because this is very, very whippy, and I think even people who are shorting too, I think it's after this will be the 7th week. Like if the market goes down this week, it'll be the 7th week in a row. I don't find that that's an easy setup for shorting either. 7 weeks you're going to short after 7 weeks in a row. I mean, you really have to have a view of doom and gloom. But hey, it is working right now. The indices are in downtrends, and we are in a bear market. Look at this candle on XLP. I think that was one of the biggest one-day moves. Just, amazing how quickly that this was one of the few, I think it was just the consumer staples and energy that were hanging above the 50-day moving average. Well, it's just energy now. All right, guys, have a great night, and I'll see you tomorrow.